Okay, fam, welcome back. So today we're going to be going over the macro markets overview for the month of November in 2024. So with that being said, let's get it. Okay, so there are channel memberships you guys can sign up for 25 bucks a month. If you want to, again, it gives you early access to the content. If you don't want to do it, you don't have to. It's entirely optional. And if you choose to do it, you can always um, cancel your membership anytime you want to if you feel like it's no longer relevant. It's entirely optional. There is no obligation, no pressure, anything like that. I just want to make it known to you guys that it is there, and it's the join button below the video. So let's get into the content. All right, so you guys know how we do this. We're going to start with the SPX, which is the actual S&P 500. Okay, it is not the futures version. The futures version is a derivative market. It's not the actual stock market itself. Okay, so on the weekly time frame here, we have what looks to be a breakout candle. For those of you guys that don't know, a lot of retail traders usually will see this as a bearish indicator. They'll tell themselves, "Oh, well, it just keeps on climbing higher, so why would I buy it here?" But the reality is, most of the time when the markets make new all-time highs, they usually just keep going to new all-time highs. That's usually how it works. Okay, same thing with stocks, same things with crypto. It's all the same. Okay, when they're pushing all-time highs in a bull run, usually they just keep going up. So would I be bearish on these markets right now? No, honestly, I wouldn't. Plus, we've also had kind of a walk back, well, not exactly a pullback in time. This is actually bearish divergence, just so y'all know. Do I think it's going to play out that way? Probably not, considering how heinous this dump in August was. Not to mention it took us quite a while to get out of there. I don't think this is actually going to be a bearish divergence that plays out. I'm actually pretty bullish for the month of November. I think that we're likely going up in November, and not just the stock indices, but pretty much everything that has value. So probably the stock indices, the metals, and also cryptocurrencies, as well as individual stocks. And in terms of the metals, after Trump actually gets inaugurated, I would assume that after he gets inaugurated, the metals will come down. The price of cryptos and stocks are going to skyrocket, and the dollar index will probably also come down as well. That would be my guess, but we'll have to wait and see if I'm right about that in roughly about 2 months from now. Okay, so SPX on the monthly, it's very bullish. You guys can see we have pushed to a new all-time high. That's definitely a good sign. You can see we were pretty much kind of in this consolidation for about 3 months, and then we took off. But again, I mean, look, this reiterates my point. Every time we hit a all-time high, we go to a new all-time high shortly thereafter. Okay, month over month, it usually does happen week over week as well, with some pullbacks along the way, because that is normal and healthy. We always want pullbacks because, again, if you get the Burj Khalifa, which usually only happens in crypto, not stocks, then it's not a very good sign, right? It's good to have slight pullbacks along the way so we can keep slowly trudging up, or just going up in general. That's always a good sign. So it looks very bullish on the daily too. You guys can see we just keep climbing, right? If there is any kind of pullback, maybe we pull back into, I don't know, maybe this gap here, 57.70 to about 58.70. Do I think that happens in the month of December? I highly doubt it, because again, we're in the holiday season. This is bullish seasonality. November, December, August, or November, December, January, and February are usually pretty bullish. Okay, so the NASDAQ 100 here, this thing looks pretty bullish. We did actually get a green candle close outside of it. We are not at all-time highs, but that's a pretty bullish dragonfly candle there. It's not a perfect one, but it's green, and it's above this triangle pattern here, so it's very bullish. Again, the target for this is 24,600. When we get there exactly, I don't know. Maybe it happens by like the middle of next year or something. But that's just the target. Okay, it's measured from the bottom of the triangle to the top. So that's kind of how you would do that for an ascending triangle. On the monthly time frame, nice big fat green candle here. It sure as hell didn't feel like it during the month, because man, I cannot tell you how many trades I took in futures where it just kept getting stopped out, or I was like sitting there just watching the markets like, okay, what the hell is this thing doing, dude? Why does it keep just going sideways? What is going on here? So you wouldn't think it was going up, but markets, they do screw with people's psychologies, even people that have a lot of experience in this market or a lot of money. Sometimes it screws with them too. Trust me, even the best of people out there in the markets do have their days, so to speak, where they have to sit back and wonder what the hell is going on, right? Okay, so gap got filled here. I'm not worried about that. So yeah, I think we're probably going to end up going higher. Now, as for Trump and big tech, look, guys, honestly, I'm not worried about it. I think all he really wants is just to make sure that people's First Amendment rights are not getting infringed upon. It doesn't necessarily give people a license to go on there and bash other people's names. I don't think that's really, I don't think he's giving people a license to do that. I think it's just basically mainly he wants to make sure that big tech is not going to infringe on somebody's First Amendment rights, right? Because it is constitutional, so that's important. So I'm not worried about big tech. I think they'll keep likely climbing higher too. All right, so Russell 2000, this is a big deal. So the Russell, as of right now, is getting ready to snap all-time highs. As a matter of fact, you can see we got a wick this week above the all-time highs. That's extremely bullish. Okay, that means likely we are going to push higher. So the Russell 2000 has actually nailed all-time highs from back here in 2021 this week, in the same exact month, funnily enough, in November. But yeah, I would say that this is looking pretty good. It's probably going to keep going up. I mean, there's a chance maybe it bobs around here for maybe another week or two, and then goes up from there. We'll just have to wait and see on that. I did not want to do that. Let me get off of that. So yeah, in my opinion, I think it looks good. We got the breakout here, pushing up above the EMAs into the previous resistance. We got a wick above it. Usually when you get a little wick like this above the previous candle, that's potentially an indication of one of two things: either a bear trap, where basically they try to dump on your head and avoid allowing you to get a breakout here, or you get a short squeeze, which would be the inverse, or the wick could signify that there is no bears and it's just simply going to go higher. Either way, it looks bullish to me. And like I said, basically, if we do get stuck here, we might chop around a little bit and then boom, pop out to the upside, maybe within a couple weeks or something. Maybe it happens immediately. We'll just have to wait and see. Okay, so Dow Jones, this thing basically just, it just disrespected the 2021 all-time highs. It's been going high for a very long time. I don't see any indication here that this thing looks bearish, in my opinion. I still think it looks pretty good. Maybe a pullback to the bottom of this channel at some point, 42,200. That could be for those of you guys that are on the indices that are doing options, just kind of those levels there. So 42.1 to about 43.4. And the Russell 2000 for the EMAs, maybe, if there is a pullback, 22.40 to 23.20, but everybody and their brother is bullish on the Russell because of Trump and the Fed cutting rates and all that jazz. And you can see this big fat green candle on the monthly pretty much said what I just said right there. So I don't think I need to say more about that. Do I think there's going to be a pullback on the Russell? Probably not. Same thing on the Dow. I don't think it's going to pull back, and if it does, probably not much. So yeah, indices, they're likely going higher in December would be my guess. Okay, so now going over to the stocks above the 50-day moving average and 200-day moving average. All right, so we'll start with the NASDAQ. This thing, simply put, this is kind of the short to midterm. This is for people that are looking to more like maybe swing trade or position trade, because, some position traders, the position trades usually take like weeks or months. They're not short-term trades. Swing trade could be anything from, a couple of days to a couple of weeks to a couple of years. Kind of just depends. But usually when we get in the buy zone here, that is the most ideal time to enter for the markets overall. That's if you're a dividend investor, this is the best time to buy the lows in this green box. It's the best time to sell the highs up here in the red box. Or as a position trader, obviously if the markets are way down here, then pretty much anything in the market is a steal. And as a position trader, this is a position trader who is a bull's dream, essentially. That's what they love, is they love seeing, all kinds of opportunities in the markets. They can enter call debit spreads or take fat positions on the spot, whatever they want to do. Anything above 50 is basically risk on for swing traders. So we are above 50. Do keep that in mind. Going over to the 200-day. Same thing, above 50, but kind of in no man's land. Again, this one particularly is for long-term investors, not necessarily position traders, swing traders. You can see how rare it is for us to get into the buy zone or even into the sell zone. We can spend a very long time in between those two. That's kind of where we sit currently. So the fact that it's above the 50, even though the NASDAQ and tech has kind of been getting beat over the head, so to speak, tells me that the tech market is still very bullish at this point in time. So S&P 500, very similar to the NASDAQ, okay? So the 50-day is more for swing trades and position trades. We're not in the green, but we're not in the red. We're kind of just sitting in the middle. Above 50, that's a good place to be, in my opinion. The 200-day, in this case, we are a little expensive here, but again, I mean, you guys can see we can sit up here at these highs for a very, very long time and not sell off. As a matter of fact, if I go back in time here, you can see between 2013 and 14, even all the way to 15, we didn't even start sloping down until 2015. And then we kind of trudged around here between 16 and 17. So it's possible to sit at these highs for a very, very long time without having a pullback. I want you guys to keep that in mind. So again, this is the investor version of the S&P. So the 200-day, when you see it in the green box, that is basically every dividend investor, a long-term investor's dream. The bear's dream is the opposite up here, are people looking to take profit. And we're above the 50, which means, in my opinion, we are still very firmly in a bull run. All right, so the yield curve, I'm going to throw you guys a curveball today on the yield curve. So I'm actually going to, and I know this is going to sound crazy. You guys are probably going to be like, what the hell are you talking about, dude? So look, we told you guys, I can't remember how long ago. It was a few months ago. I don't even remember what video it was, honestly. Maybe you guys can let me know in the comments below. But we told you guys that the uninversion of the yield curve was a warning sign, okay? Usually when this thing, not when it inverts, but when it uninverts, when the Fed starts cutting rates and it uninverts, usually there's about a 12 to 18 month window until a recession happens, okay? So the Fed started cutting in September, so maybe that video was in September, I don't remember, but it's been 2 months since then, okay? And the 2-year yield is under the 10-year yield. Now, I will tell you guys this, okay? I know that Trump is working, secretly. Well, he has a guy, a secretary treasurer, that is a finance guy. Okay, he knows how to work these markets, how to work the economy and stuff like that to get the best case scenario outcome. He's also working closely with Jamie Dimon, the CEO of JP Morgan Chase. Trump is also a billionaire. He's not just a politician now, not a typical politician, but there's a reason why I say all this, okay? Under any other president in history, your typical politician, I would say that the likelihood that the uninversion of the yield curve pretty much almost guarantees a recession is coming. But because Trump is in office and because of the particular picks that he has for his cabinet, I would say that there's actually a pretty good probability that even though the yield curve has uninverted, that there is not going to be a recession in 12 to 18 months. Now, could we still have a bear market for crypto in 2026? I do think so. Again, we'll have to see if the whole mainstream adoption, the gold ETF going up for 7 years, repeats for Bitcoin. That remains to be seen. But in terms of like a traditional recession, because Trump is the one that's in office and his particular cabinet and picks and people that he works with, I think the likelihood that a recession is going to happen is very low, even with the uninversion of the yield curve. Okay. So there's your curveball. All right. So Fed funds rate, it's still expecting to go down, I believe, by a quarter basis point. I don't have it pulled up here, but that's pretty much the expectation of the market at this point. So the Fed funds rate itself, it's been a while since I looked at this, is currently at 4.8. I mean, look, the reality is the lower the Fed funds rate goes, the cheaper the money becomes to borrow for businesses and people, which is good for the economy, right? People get to go out there and spend money on SHIT that, they may or may not need. Who cares, right? We're here to make money. People can do what they want to do with their own money. but it's also good for businesses. Businesses get to hire more people. They get to buy and sell more products at cheaper prices. Good for the economy. Good for global, national and global expansion, GDP, all that stuff. So yeah, that's going to keep likely coming down over time. We've already gone over this, how Trump and his cabinet's going to implement all that. So the unemployment rate, I am still expecting this to remain relatively flat. I don't think it's going to change, especially with Trump coming in office. The deportation of illegal immigrants and bringing all the companies that are offshore back into the United States, like manufacturing jobs, stuff like that. Those will kind of counter each other. They'll offset each other. So if one was meant to be a negative, it'll be offset by the other. So in my opinion, it will basically have a neutral effect, right? That's kind of the expectation here. And again, just understand that I know it's a sensitive topic to talk about immigration and all that for some people, but we are here to talk about business. Okay. That's what this is. All right. So next thing I want to go over here is, let's see. So the oil prices, oil is a major contributor to CPI. I've already told you guys my thesis on this. When Trump gets in office, the wars will come to an end. He'll drill, baby, drill, all that stuff, and there will be plenty of oil drilling in the U.S., plenty of oil jobs. Gas prices come down, oil comes down, and thereby inflation comes down, right? So instead of oil being inflationary, it will be deflationary, which is what we want. That's good, right? So here's the gist of this. So if you guys are oil traders or you want oil stocks, any oil stock right now, in my opinion, would be, just my opinion, of course, would be considered a buy. Why? Because it's in the buy zone right now between 62 and 76. And then, of course, if you were looking to take profit on ExxonMobil or Chevron or something like that, maybe wait till oil gets back up to 90 to 95. That is just my opinion, of course. I think oil could stay in this zone or maybe even down here for quite some time. Okay, let's go over the metals. All right, so you guys know how we do this it's always on the monthly time frame, not the weekly. So we are starting to see the histogram on the monthly slow down a little bit. This candle is still very bullish, even though it's red, but it's massively overextended from the EMAs here, okay? And the monthly time frame is very, very green in that shade. Last time we saw that, the price of gold had a massive pullback. Okay, so it pulled back, I think, like roughly around 23% here during the pandemic, as some people would call it. And then, of course, you got this overbought peak here, right? Pulled back. Even this little one right here pulled back. And this one here too. So pretty much what I'm saying here is every time we had the overbought on the monthly, there was a pullback in gold. So we'll have to see where it goes. My opinion, maybe it bottoms out somewhere maybe around, I'd say the top of the zone. So 2190 to 2150, somewhere in there. That'd be a pretty good pullback area. We may consider picking some up at that point. Do I think it's a buy right now? Hell no, I don't. I think this thing is expensive as you know what, and I would not touch it with a 10-foot pole. Gold is a great metal to own, but at the right price. That's just my opinion. All right, so silver. I like this one a little bit more. I don't like that it's in the resistance zone, though. So if I was looking for a pullback, I'd probably wait until it gets down to at least 28.84. If you're a position trader, you're an investor, day trader, any of that stuff, you don't care about this. Position trader, you care about this. Investor, you care about it, but day trader, you don't care about it. So yeah, probably anywhere between 29 and I would say maybe even all the way down to this line right here where the EMA is, so about 24. So 24 to 29 for a pullback. Again, generally the best time to buy silver or any of the metals is when it's sitting at a low like this and kind of just going sideways. Again, we talked about accumulation blocks. That's pretty much what these are. Silver is still kind of expensive in my opinion, but not as bad as gold. Palladium, on the other hand, this thing's a steal. You can see it's already getting the golden cross. It got oversold recently. So yeah, I mean, pretty much the price it's sitting at now, in my opinion, is a rare opportunity. You guys can see the last time we were here was in 2018. So that was 6 years ago. So the upside here is mammoth, 270%. So the previous all-time high on palladium was $3,500. And it is currently at $1,000. You guys can do what you want to with that. Platinum is also still very cheap, and it is basically just one huge fat accumulation block. We've talked about this ad nauseum many times. When it goes sideways like this, at the bottom of a move, what does that usually mean? It usually means it is just accumulating and eventually is going to rip to the upside, right? So this thing is cheap, in my opinion. It's not perfectly in the green, so that'd be about 8 to 825. But I'd still say it's pretty cheap. Palladium is the best bet, in my opinion. So targets up here is about 1760 to 1900, I would say. All-time high is 2300. I'm not so sure I'd be betting on that. I'd probably be looking for the red box, about 120% gain here. Copper still looks very bullish. Copper is not just a metal, it's also a measure of demand. Demand obviously means that the economy is good, we're in a bull market, all that jazz. It looks pretty good. I don't really see any topping signals here. It's just kind of bobbing around the highs, in my opinion. Is it cheap? No. But as demand goes up, it's probably not going to stay cheap. It's probably just going to keep going up, would be my guess. I'd be looking maybe for somewhere around maybe 380, maybe like 320, 380, somewhere in there as a buy. The all-time high is at 510. So if you're lucky enough to get a pullback here, maybe 55% gain. Okay, so the fear and greed index, next one here. So this is for the stock market. This is not for crypto. We cover crypto in a separate video. So we're currently sitting in the greed territory. I think the main reason why is because the sell-off that we had in August was just absolutely stupid. That thing was ridiculous. I don't think anybody could have seen that coming, honestly. That's what's called a black swan event or a flash crash. A lot of people probably panic sold there. We did not. And fortunately, we did not because it really sucked and it was painful, not going to lie. But when the markets went back up, oh boy, did we make money. Okay, so yeah, lots of mixed metrics here. I will say that I think we're good to go. We could still go much higher into the extreme greed. We probably will in line with seasonality. So we're probably going to go up next month in December, or by the time you guys see this, January, February, maybe start getting some kind of pullback in March and April, right alongside seasonality. That's usually what happens. Okay, so Bitcoin, the corn of the bit. The altcoins are going to the moon, just so y'all know. We'll talk about that in a separate video, though. So yeah, you got this big fat monthly candle here. What I will say about the monthly candles on Bitcoin is usually when we get monthly green candles, we get lots of them. After the halving, after it breaks all-time highs, 2021, after the all-time highs got broken, we got 1, 2, 3, 4 green monthly candles in a row. And I got to go back here a little ways for 2017. After we broke that all-time high, 1, 2, 3, 4 in a row before a pullback, and then another 3 in a row before eventually topping out. So we could be looking at potentially at least another 2 or 3 months of green on Bitcoin. I think there is, and again, I'm not going to cover this too deeply. So I think what's going to happen here is maybe Bitcoin may kind of chop around a little bit under 100K. Kind of bob around a little bit because I'm sure there's some bears or some people taking profit up here that are trying to hold the price down. I wouldn't be surprised. So maybe it just kind of bobs around under 100K a little bit, maybe somewhere between, I don't know, 90, 95, 100K for like a couple of weeks or something, maybe a few weeks. And the Ethereum and the altcoins take over, they blast off, okay? And then eventually, maybe in a few weeks from now, Bitcoin smashes 100,000 and starts climbing towards whatever it's going to hit, 120, 140, 160,000 by March or April of next year. It's hard to say exactly. Maybe it tops out in January. Maybe Bitcoin tops out in January, February. But I think likely it's probably just going to chop around for a week or two before smashing all-time highs above that $100,000 level while the altcoins basically moonshot. And then Bitcoin does its thing and goes higher from there. That's kind of what I'm expecting. Okay, so we got a couple more things here. So the dollar index, this thing is slowly starting to come down. You can see the indicators are starting to point downwards. That's a good sign. That's what we want to see. Why is this important? Because as you guys know, Bitcoin and the dollar have an inverse correlation. So why does this matter? Because when the dollar goes up, Bitcoin goes down. When the dollar goes down, Bitcoin goes up, right? We want Bitcoin to go up and we want the altcoins to go up. And when does that usually happen? When the dollar is falling off a cliff, okay? Just because the dollar falls off a cliff doesn't mean it's weak. It just means that money is flowing out of the dollar back into risk on assets. And that usually happens when the Fed cuts rates, okay? Which they are. So, yeah, we got a weekly close below this line here. It looks like it's pretty clear cut. So maybe a move down to 103. Personally, I would like to see a move below these lows here. Okay, if we get a move below these lows here, start pushing down to this 95 area, I would say that that's pretty much a green light for the altcoins and Bitcoin to do their thing and smash for the next 12 months. I wouldn't be surprised if that happened. So in terms of the VIX, I mean, there's not really much to say on the VIX. It's pretty much probably just going to sit at the lows for the next 12 months. I am not expecting some kind of flash up like what we saw in August or a recessionary indicator. I don't think that's going to happen. Okay, we're pushing this downtrend line. Do I think it's going to play out where it breaks out of this and we have some kind of ridiculous, VIX going to like a billion or some crazy thing like that? No, I don't think so. I don't think that's going to happen. All right. So anyways, hope you all enjoyed this content. Please like, comment, and subscribe, and I'll see y'all later. Peace.